Welcome in, everyone. We're diving deep today into India's economic landscape as we roll into 2025. And you know what that means. It's time to crack open the latest Chartered Accountant Journal. Think of this as our financial crystal ball, especially, of course, for all of you fellow number wizards out there.
Oh, it's a great resource. It always keeps us so up to date on all those trends of insights that are shaping the accounting world.
Absolutely. And this month, it's particularly exciting because it's all about how India is working toward becoming, get this, a developed nation by 2047, no less. I mean, talk about an ambitious goal.
It's a bold vision, no doubt.
Yeah.
And this issue gives us a peek behind the curtain into how they're planning on making it happen. The centerpiece, really, is the union budget for 2025-26, kind of like their financial roadmap for the year.
Now, I know, the word budget can sometimes feel a little, well, dry. But trust me, this one is anything but. It's actually packed with details that could directly affect you, the listener, out there. In fact, they're calling it a budget that's driven by four engines. Get this.
And these engines are all about working together to transform India. And I don't mean just on paper. I'm talking about how people actually live and work. So let's break down these engines, what they're all about, and how they might affect you.
Sounds good to me. Let's fire up those engines. What's the first one we're looking at?
Well, the first one aims to make India, get this, the food basket of the world. And they're starting with something I bet you have in your pantry right now, pulses.
All right, so we're talking lentils, beans, chickpeas, all that good stuff. But why pulses? Why focus on those specifically?
Well, I mean, they're a staple of the Indian diet, right? But there's also a strategic element to it. This budget is launching something called the Mission for Atmanirbharta in pulses. Basically, it means self-reliance in pulse production. They're focusing on three types, tur, urad, and masoor, and they're getting really hands-on. The government will directly purchase these pulses from farmers at a guaranteed price. Think of it as a safety net for farmers and a way to just encourage production.
Interesting. So that sounds like a win-win for farmers and consumers alike, especially if it leads to those stable prices and better access to these foods that, everybody needs. So that's engine number one. What about engine number two? What's next?
Okay, engine number two is all about giving a boost to MSMEs. Those millions of micro, small, and medium enterprises that are really the backbone of the Indian economy.
Yeah, MSMEs are so important, right? I mean, creating jobs, driving growth, but they often face these huge challenges, getting access to capital, all the regulations they have to navigate. So how does this budget tackle those problems?
Well, there's a big change that could directly impact you if you're running a business. They've redefined what actually qualifies as an MSME. They've gone ahead and adjusted the investment and turnover limits. What that means is businesses that maybe were in one category before could now be eligible for a whole different set of resources and support programs.
That's huge. So do we have the new numbers so folks out there can see where they stand?
Oh, absolutely. All right, so for micro enterprises, the investment limit is now 2.5 crores. That's up from 1 crore. And the turnover limit has doubled to 10 crores. For small enterprises, the investment limit is 25 crores now, and the turnover limit is 100 crores. And get this, for medium enterprises, the investment limit is a whopping 125 crores now, and the turnover limit is 500 crores.
So depending on your business, you might find yourself in a whole new category, and that means access to all sorts of things, right? Different loan programs, tax breaks, even government contracts. Definitely something worth checking out. All right, on to engine number three. What's powering this part of the budget?
Engine number three is all about setting the stage for long-term growth. They're doing that by building a really, really solid foundation. And when I say solid, I mean solid. We're talking infrastructure here.
Ah, yes, infrastructure. Always a hot topic when it comes to emerging economies. Building those roads and bridges and power grids, everything that businesses need to thrive. So where are they focusing their efforts in this budget?
Well, they're putting their money where their mouth is. They've got a massive, massive allocation of 1 lakh crore, that's 1 trillion rupees, going to what they call the Urban Challenge Fund.
Okay, that is a serious amount of money. What exactly will that Urban Challenge Fund cover?
Think housing, smart cities, urban planning. It's all about creating those modern, livable urban spaces, the kind that attract investment, create jobs, and just improve people's lives. Better transportation, efficient energy grids, sustainable housing solutions, all that.
So it's not just about, concrete and steel. It's really about creating a more sustainable and livable future for everyone.
Exactly. And this could have a direct impact on you. Think about the business opportunities that might pop up in your city as these projects get underway. Construction, technology, retail, even services. The ripple effects from this kind of investment can be huge.
So keep your eyes peeled, folks, for those opportunities in your local area. Sounds like things are going to get really interesting. All right, we've got one engine left. What's powering that final push?
The fourth engine is all about propelling India onto that global stage. It's about exports.
Okay, now India is already a powerhouse in IT and service exports, right?
Right.
So is this budget looking beyond those traditional sectors?
Absolutely. They're taking a really multifaceted approach to boost exports across the board. They're creating a dedicated export promotion mission. It'll give targeted support, especially for those MSMEs who might not have the resources or know-how to navigate international trade.
That's crucial. So many small businesses out there have these amazing products and services, but they struggle to break into those global markets. What kind of support will this mission be offering?
Think of it as a one-stop shop for exporters. They'll be providing guidance on everything, from market research to product development to regulatory compliance, even navigating all those tricky trade barriers that can be, let's face it, a real headache.
Wow, that's a real game changer for businesses who are wanting to go global. So with all four of these engines firing on all cylinders, it sounds like India is ready for some serious economic transformation.
It's an ambitious plan, no doubt. But these four engines, agriculture, MSMEs, investment, and exports, they're all interconnected, working toward the same goal. And that goal is to create what they call Viksit Bharat, which means a developed India, an India without poverty, with quality education and healthcare for everyone.
Okay, so we've got the big picture now. Now let's zoom in a little on some of the finer details of this budget that the journal's articles cover. First up, the fiscal outlook. How does the government plan to handle its finances this year?
Well, the budget is projecting a decrease in the fiscal deficit. That's basically the difference between what the government spends versus what it brings in. On the surface, that sounds like good news, right? It suggests they're tightening their belts, but there's a little catch.
Okay, all right, I knew there had to be a twist. What's the catch?
While the fiscal deficit is getting smaller, there's still this thing called a revenue deficit. And that means the government is still spending more on its everyday expenses than it's actually bringing in through revenue.
That can't be sustainable for very long, can it?
Not really, no. It's kind of like using your credit card to cover all your daily expenses every month, but you never actually pay it off. Eventually, that's going to catch up with you.
So it's a bit of a warning sign then.
Yeah.
Like the government might need to raise taxes or make some spending cuts down the line. And that, of course, would affect businesses and individuals, everybody.
You got it. It's something to keep an eye on for sure as we move forward. Now, the Journal also has this really neat visual. It's a chart that shows how they've sliced up the budget pie across different ministries.
Oh, a pie chart. Everyone
Wow.
loves a good pie chart. So who's getting the biggest slice? I'm guessing defense is usually up there, right?
Yeah, you're right on the money. Defense is getting the biggest chunk, followed by road and highways, and then railways.
Okay, so that tells us a lot about their priorities, doesn't it?
Absolutely. It shows that infrastructure development is a huge focus. They see investing in those sectors as essential for, boosting economic growth, improving connectivity across the country. It's all about laying that groundwork for future prosperity.
A long-term investment strategy. I like it. Okay, enough about roads and bridges, though. Let's talk about something that I know is on everyone's mind, taxes.
Oh, taxes. Yes, always a hot topic. So the Finance Bill 2025 that goes along with the budget, it's aiming to make things a little simpler. Good news for you.
Okay, tell me more. What kind of changes are we talking about here? What's in it for the average taxpayer out there?
One big one is a reduction in TDS rates. That's tax deducted at source. They're also aiming for fewer of those thresholds, which should make compliance a little easier, both for businesses and for individuals. Think less paperwork, less confusion, and hopefully a lot less stress when tax season rolls around.
That sounds like a win-win to me. But, there's always a downside, right? Simpler doesn't always mean less revenue for the government.
You're right. But the hope is that by easing the burden on taxpayers and making the whole system a little more user-friendly, they'll actually encourage greater compliance, and in the long run, see an increase in revenue.
Okay, interesting. It's a balancing act for sure, but it seems like they're really trying to find that sweet spot that benefits everybody, both the taxpayers and the government. All right, now let's move on to another tax topic that can be a little bit of a maze sometimes. GST, the goods and services tax. Are there any notable changes there?
Oh, yes. There are some really intriguing amendments being proposed. One that really stood out to me is the introduction of what they call a track and trace mechanism for certain goods.
That sounds pretty high tech. What's the purpose of this? Are we talking like drones following packages around or something?
Not quite drones, but it is about creating a digital trail. They'll be using unique digital markings, things like barcodes or RFID tags, to track goods as they move through the supply chain.
So it's like giving every product its own little digital fingerprint. Okay, I get that, but what's the point of all this tracking?
It's about keeping things honest, curbing tax evasion, basically. By creating that digital trail, it's much, much harder for goods to slip through the cracks without, the proper documentation and tax payments. It's all about increasing transparency and accountability, which should lead to a more fair and a more efficient tax system.
That makes a lot of sense. But I imagine putting a system like this in place, I mean, there's got to be some challenges that come along with that, right?
Absolutely. Businesses are going to need to adapt their systems and processes to accommodate all these new tracking requirements, and there's going to be costs involved with that for sure. How well this works really is going to depend on how the government rolls out these implementation guidelines and how prepared businesses are to adapt.
Well, it's certainly a development worth watching. Looking at all of these initiatives, I'm sensing a theme here. It's not just about budgets and taxes and economic growth. There's a real focus on sustainability.
You're spot on. Sustainability is not just a buzzword anymore. It's a core part of how businesses and governments think and operate. And the journal really dedicates a lot of space to it this month. It especially highlights how important ESG factors are becoming when it comes to business decisions.
ESG, so that's environmental, social, and governance, right?
That's it.
So it's not just about making money. It's about making a positive impact on the world, too.
That's the idea. And the shift is being driven by, I don't know, it's almost like a perfect storm of factors. You've got investors looking for companies that have strong ESG performance, consumers demanding more sustainable products and services, regulators introducing stricter environmental and social regulations. It's all coming together.
It's like everyone's pushing in the same direction now, toward a more sustainable path. Okay, let's dive into some of those specifics. The sustainability highlights that the journal covers, they talk a lot about sustainability reporting. What exactly does that entail?
Well, in a nutshell, it means companies are now expected to go beyond just those, financial reports. They also have to disclose how they're doing on environmental, social, and governance issues as well. It's about being transparent about their impact on the environment, their social responsibility initiatives, and their governance practices.
So it's about painting that complete picture, not just the bottom line.
Exactly. It's about accountability. And there are, established frameworks and standards out there, like the Global Reporting Initiative, that help companies prepare these reports. It's not just about making vague claims. It's about, providing the data, showing that commitment to continuous improvement.
But how do we know companies are being honest and accurate with these reports? Do we just have to take their word for it?
Well, that's where sustainability auditing comes in. It's a new field that's gaining a lot of traction, and it's all about verifying that those sustainability reports are accurate, reliable, making sure that companies aren't just greenwashing or making claims they can't back up.
So are there actual auditors specifically for sustainability? What do they actually do?
They're like financial auditors, but for sustainability data. They examine everything, the information, the methodologies, the processes behind the company's sustainability claims. They give that extra layer of assurance that what's being reported is actually credible.
That makes sense, like a fact checker for sustainability.
Yeah.
And I see that the ICAI, the Institute of Chartered Accountants of India, they're playing a role in this as well.
Oh, yeah. They're taking a leading role in promoting sustainability reporting in India. They've even developed what they call a sustainability reporting maturity model. It helps companies kind of assess where they are with their reporting practices, identify areas they can improve.
Okay, so we talked about economic engines, budgets, taxes, even sustainability. Are you ready for the part that might sound a little bit like a sci-fi movie?
Bring it on. You mean the AI, the blockchain, all the futuristic stuff?
You got it. This journal is packed with insights into how technology is reshaping the accounting profession. And I think it's safe to say things are going to get really, really interesting.
It's fascinating how IKI is not just, addressing these global trends, but they're also highlighting these specific challenges and opportunities within the Indian context. There was one article that really caught my eye. It focuses on something they're calling the MSME Nurture program.
MSME Nurture.
Okay.
Sounds kind of warm and fuzzy. What is it? Some kind of support system for small businesses?
It's more than just support, it's about empowerment. The article is actually aimed at chartered accountants themselves. It encourages them to become like entrepreneurial advisors specifically for MSMEs.
So it's kind of like a guide for CAs who want to be the go-to experts for those smaller businesses,
Yeah,
helping them, navigate all the unique challenges they face.
precisely. It emphasizes really understanding the MSME landscape, things like access to financing, adopting new technologies, even just cutting through all that red tape. These can be huge hurdles for smaller businesses.
Yeah, that makes a lot of sense. MSMEs, they're vital to the economy, but they don't always have those same resources as the bigger companies, right? Having a CA who really understands their needs, that can be a game changer.
Absolutely. And for CAs, this translates into a huge opportunity. There's a growing demand for specialized services, things like startup CFO support, outsourced accounting, even helping MSMEs tap into those government subsidies that are out there.
It sounds like a win-win situation. CAs can build those thriving practices, and at the same time, they're making a real difference in supporting the growth of these businesses that are so vital.
Now, speaking of growth and opportunities, ICI hasn't just been busy on the domestic front, right? They've been making waves globally as well.
You're right. Not only did they host the World Forum of Accountants, they also received some pretty impressive recognition themselves. Oh, okay, I'm all ears. What kind of recognition did they get?
Get this, they earned a spot in both the India Book of Records and the Asia Book of Records.
Wow, double record breaker. What did they do to achieve such a feat?
They set a record for conducting the maximum programs conducted on entrepreneurship skills in a day. An incredible 97 programs in just 24 hours.
That's incredible. Talk about an action-packed day. What were these programs all about?
They covered a huge range of entrepreneurial skills, everything from, the financial fundamentals of running a business to marketing, business planning, fostering innovation. It's a clear signal that ITI is committed to developing well-rounded professionals, ones that are ready to support businesses in every aspect.
So they're not just churning out number crunchers. They're equipping CAs with the skills they need to be those strategic advisors and thought leaders.
Exactly. And it wasn't just about quantity, it was about quality too. They also set a record for the maximum skill enrichment programs in a fortnight, 79 programs in just 15 days.
So they're really going above and beyond to provide that ongoing professional development. Keep CAs at the forefront of their field. That's inspiring to see, an organization so dedicated to its members' growth.
It really is. Now, amidst all this talk about budgets and sustainability and all that cutting-edge technology, let's not forget about some of the nitty-gritty details that can really have a big impact on your finances. Things like TDS and TCS.
Yeah, you're right. Those acronyms can sound a little intimidating, but they are important to understand. Can you give us a quick refresher on what TDS and TCS are all about?
Sure. So TDS stands for tax deducted at source. TCS stands for tax collected at source. They're both mechanisms for collecting taxes up front, ensuring a steady flow of revenue for the government.
Okay, so it's like prepayments on your tax liability.
Yeah, you could say that. TDS is deducted from certain payments you receive, like salary, rent, interest income. While TCS is collected by sellers on certain goods or services you purchase, it's all about making sure that taxes are paid, as you earn or as you spend.
So what are some of the key changes to TDS and TCS that they're proposing in this finance bill?
Well, there are a few. One of the most significant is the rationalization of those TDS and TCS thresholds. A threshold is basically the limit above which TDS or TCS becomes applicable. So, for example, if the threshold for TDS on rent is $50,000 per month, and your rent is below that, well, your landlord doesn't have to deduct any TDS. But if it's above that threshold, then they're required to deduct TDS and deposit it with the government.
Okay, so the threshold is like that trigger point. And what are they doing with those thresholds in the new bill?
Well, the finance bill is proposing to actually increase several of these thresholds. What that means is TDS or TCS will kick in at a higher income or sales level. It's a move that's really designed to ease that compliance burden, especially on smaller businesses and individuals.
Well, less paperwork is always a good thing, right?
Yeah.
Are there any other benefits to raising these thresholds?
Oh, definitely. It can also improve cash flow for businesses. When TDS or TCS is deducted or collected up front, it can tie up funds that a business could be using for operations or investments. Raising those thresholds frees up some of that cash, which could allow businesses to reinvest and grow.
Okay, so it's a move that could actually stimulate economic activity. But But there's always a flip side to these things, right? If less TDS and TCS is being collected up front, doesn't that mean less revenue for the government?
That's a trade-off, yeah. But the government is hoping that simplifying this system, making it more, I don't know, appealing to taxpayers, will actually lead to higher compliance overall. So the theory is if more people are paying their taxes willingly and on time, well, it could actually lead to increased revenue in the long run.
So it's a bit of a gamble, but one that could pay off if it encourages that greater trust and cooperation between taxpayers and the government.
Right.
Now, the journal also mentions the elimination of those higher TDS and TCS rates for non-filers. That sounds like a pretty big change.
It is. Previously, if you didn't file your income tax returns, you'd face those higher TDS and TCS rates as kind of a penalty. But, the government felt that this approach wasn't really effective. It might have even discouraged some people from filing their returns altogether. So they're scrapping that penalty and hoping that a more encouraging approach will lead to better compliance overall.
That's kind of like it's a shift from a punitive approach to a more supportive one, like
Right.
saying, hey, we want to make it easier for you to do the right thing.
Exactly. It's about creating a system that's seen as fair and reasonable rather than one that feels like a punishment.
Okay. We've tackled TDS and TCS.
Mhm.
Now let's move on to those GST amendments we talked about a little earlier. The goods and services tax. It seems like a constantly evolving beast, and this finance bill is bringing in a whole new wave of changes.
Yeah, you're not wrong. There are quite a few amendments being proposed, some with retrospective effect, others to be implemented prospectively.
Retrospective. That sounds unusual. Doesn't that mean these changes would apply to transactions that happened in the past?
You're right. It is unusual for tax laws to be applied retrospectively, but in this case, the government's trying to clarify certain provisions, make sure there's consistent treatment across different types of transactions, even those that took place before the amendment.
Okay, so it's about like cleaning up the rule book and making sure everyone is playing by the same set of rules. Can you give us an example of one of these retrospective amendments?
Certainly. One amendment clarifies the GST treatment of goods that are warehoused in special economic zones, SEZs, or free trade warehousing zones, FTWZs. There was some confusion about whether the supply of these goods to any person before they're, cleared for export or moved to the domestic tariff area, whether that was subject to GST.
So businesses weren't sure if they need to pay GST on these goods while they were still in these special zones.
Exactly. The amendment clears up that confusion by stating that those supplies are neither a supply of goods nor a supply of services, essentially exempting them from GST.
So a bit of a relief for businesses operating in those zones.
Mhm.
And it aligns with the government's goal of, promoting exports.
You got it. Now, it's important to note that while this amendment is retrospective, it won't result in any refunds for any GST that might have been collected on those supplies before the change. The government has said, explicitly that refunds won't be provided for those past transactions.
No retroactive windfall for businesses then.
Yeah.
Okay, so let's shift our focus to those amendments that are proposed to be effective prospectively. These are the changes that will impact transactions happening after the amendment comes into effect. One that caught my eye relates to what they call interstate reverse charge mechanism transactions, or interstate RCM for short.
Ah, yes. Interstate RCM transactions have been a bit of a gray area, leading to some compliance challenges for businesses. The amendment's aim is to address this by explicitly including these transactions under what's called the Input Service Distributor Mechanism, or ISD.
Okay, I'm going to need a bit of a breakdown here. What exactly is the ISD mechanism, and why is this amendment significant?
Sure. So an input service distributor, it's essentially a centralized entity within a company that receives invoices for services used by different branches or units across different states. It then distributes the input tax credit, or ITC, related to those services to those branches or units.
So it's kind of like a central hub for managing ITC across a company's various locations.
Exactly. Now, under the existing GST law, there was this uncertainty about whether this mechanism could actually be used for those interstate RCM transactions. Businesses weren't really clear on how to handle the ITC related to these transactions, which created, a lot of confusion and compliance risks.
So this amendment clarifies the situation, saying that the ISD mechanism can indeed be used for these interstate RCM transactions.
You got it. This really simplifies compliance for businesses, allows them to seamlessly allocate that input tax credit across across multiple GST registrations within the same company, even for those interstate RCM supplies.
Okay, sounds like a much needed clarification then. Hopefully it'll reduce those errors and disputes with the tax authorities.
That's the goal. Now, there are also some amendments that are proposed to be effective prospectively from a date to be notified, which basically means the implementation date is still uncertain. The government's probably still finalizing the details, and they'll announce the date when they're ready.
Okay, so let's take a peek into the future then and discuss one of these to be notified amendments. The one that really stood out to me is the introduction of a track and trace mechanism for certain commodities. We talked about this a little earlier in the context of tax evasion, but it seems like this mechanism is going to have much broader implications.
Oh, you're absolutely right. It's a big step towards really enhancing that GST compliance and curbing that illicit trade, particularly in sectors where there's, a high risk of goods moving through the system without the proper documentation or tax payments.
So it's about creating a more transparent, more accountable supply chain, making sure that goods are moving legally and that taxes are being paid at every stage.
Precisely. The mechanism is going to involve using what they call unique identification markings, or UNMs, for specified goods. These markings could be, barcodes, RFID tags, other technologies that can easily be scanned and tracked. Think of it as giving each product its own little digital passport that can be followed throughout its journey.
Okay, that's a great way to visualize it. And I imagine this will make it a lot harder for counterfeit goods to infiltrate the market as well.
You're sharp. Counterfeit goods often rely on, that anonymity, that lack of traceability. This mechanism shines a light on the supply chain, making it much harder for those fake products to slip through undetected.
Okay, so that all makes sense. But what about businesses? Won't this create a lot of extra work for them?
It will definitely require some adjustments, yeah. Businesses are going to have to invest in the technology, the systems to generate and track these UMMs, and there's going to be a learning curve as they integrate this new mechanism into their existing operations.
So there will be some upfront costs and potentially those ongoing maintenance expenses. But what about enforcement? How will the government ensure that businesses are actually complying with this new system?
Oh, they're putting some teeth into the regulations. If a business doesn't comply with that track and trace mechanism, they could face a pretty hefty penalty, a Euro 1 lakh fine, or 10% of the disputed tax on the goods, whichever is higher.
Okay, so the government is sending a clear message that they're serious about making this work. But I can't help but wonder if it might create an additional burden, on smaller businesses that might not have the same resources as larger companies to implement these changes.
That's a valid concern. The success of this mechanism, really, is going to depend on how well the government supports businesses during this transition. Clear guidelines, accessible technology, maybe even some financial assistance for those smaller businesses. It's going to be crucial.
Definitely a development worth watching closely.
Yeah.
Okay, let's move on to another to-be-notified amendment that caught my eye. This one involves the definition of local authority under the GST law.
Yes, the current definition has been a bit ambiguous, leading to some inconsistencies in those tax exemptions for certain local bodies. This amendment aims to clarify that situation and ensure that all eligible local bodies are treated fairly and consistently.
So it's about creating that level playing field and removing any confusion or uncertainty about who qualifies for those tax exemptions.
Precisely. It's a much-needed clarification that will hopefully reduce those disputes and litigation that can come up.
Excellent. Now, along with clarifying definitions, the finance bill also proposes some changes to how input tax credit, ITC, is handled. ITC is always a hot topic under GST, and it seems like the government is constantly tweaking the rules to prevent misuse and ensure compliance.
You're absolutely right. One notable change is this mandate for input tax credit reversal on credit notes. Currently, when a supplier issues a credit note, they're allowed to reduce their output tax liability. But there's been this loophole where the recipient of the credit note might not necessarily reverse the corresponding input tax credit they initially claimed.
So the recipient was essentially getting a double benefit. Once when they claimed the ITC initially, and again when the supplier reduced their output tax liability.
That's right. So this amendment closes that loophole by making it mandatory for that recipient to reverse the ITC when a credit note is issued. It's about ensuring that symmetry between the supplier's output tax liability and the recipient's input tax credit, maintaining that fair and balanced system.
Okay, so it's about preventing any unintended Unintended advantages or discrepancies, makes sense. Now, the journal also mentions something called the Invoice Management System, or IMS. What role does that play in all of this?
Right. The IMS it's an online platform that's designed to streamline GST compliance and reduce errors. It's already being used to prevent recipients from, keeping those credit notes or other amendments in a pending state, effectively enforcing that real-time reconciliation of ITC. This amendment basically gives statutory backing to the IMS, formalizing its role in the GST law and ensuring that those ITC adjustments happen in real time.
So it's about leveraging technology to enhance transparency and efficiency in the whole GST system.
Exactly. Using those digital tools to prevent delays, discrepancies, and potential disputes down the line.
Okay, smart move. Now, the journal highlights another amendment related to ITC. It involves changes to Section 38 of the CGST Act. Can you shed some light on that?
This amendment is all about streamlining that input tax credit reporting and making the generation of Form GSTR to be more seamless. That form is an auto-populated statement of input tax credit that's available to registered taxpayers. The amendment ensures that this form is accurately generated based on, the actions taken by taxpayers within that invoice management system.
So it's about aligning the ITC reporting process with the digital workflow of the IMS.
Precisely, making the whole ITC process more efficient, reliable, and less prone to errors.
Excellent. It seems like the government is really trying to embrace technology to improve GST compliance and streamline processes. Now, amidst all these changes aimed at streamlining GST, the finance bill also proposes some amendments related to appeals and pre-deposit requirements. These can have a significant impact on businesses that are involved in disputes with the tax authorities.
Absolutely. One notable change relates to appeals before what's called the Goods and Services Tax Appellate Tribunal, or GSTAT. The amendment seeks to reduce the pre-deposit requirement for appeals to 10% in cases where the dispute involves only a penalty liability and not a tax demand.
So if a business is appealing only a penalty, they'll have to deposit a lower amount up front while their appeal is being heard.
Exactly. It eases that financial burden on businesses during the appeals process, which can be particularly helpful for smaller businesses that might not have the resources to make those large pre-deposits.
That's a positive step then towards making that appeals process a little more accessible. But I'm sensing there's a caveat here.
You're sharp. While the amendment reduces the pre-deposit to 10%, it also expands its applicability beyond just cases that fall under Section 129(3) of the CGST Act. So this pre-deposit requirement will now apply to all cases where the appeal pertains exclusively to a penalty, regardless of the specific section under which that penalty was levied.
Okay, so it's a bit of a mixed bag then. Lower pre-deposit amount, but wider applicability. It'll be interesting to see how this change plays out in practice and what impact it has on the overall appeals process.
Agreed. Now, shifting gears a bit, the journal also features this really interesting study on the impact of GST on businesses, specifically from the perspective of chartered accountants in Punjab. It offers some valuable insights into how the introduction of GST has been perceived by those who have been, on the front lines of implementation.
That's a perspective I'm really curious to hear about. What did the CAs in Punjab have to say about GST? Were they generally positive or negative about its impact?
Overall, they hold a pretty positive view of GST's impact on businesses. They highlight improvements in financial feasibility, procedural effectiveness, and the ease of doing business, as some of the key positive outcomes.
So it seems like despite those initial challenges of transitioning to a new tax system, GST has ultimately created a more streamlined, more efficient environment for businesses, at least from the perspective of CAs in Punjab.
That's a fair assessment, yeah. Now, the study also delved into some demographic differences in those perceptions of GST.
Oh, that's fascinating. Did CAs of different ages or experience levels have varying views on GST? They did. The study found that younger CAs, those in the 21 to 35 age group, were more positive about GST's impact on financial feasibility and procedural effectiveness compared to their older counterparts.
I wonder if that's because, those younger CAs have grown up professionally in the GST era and might just be more accustomed to its processes and benefits, while those older CAs might still be comparing it to the pre-GST system. That's a very astute observation. It really highlights how experience and context can shape perceptions. The study also found that that CAs with more experience, specifically those with over 10 years of practice, had a more favorable view of GST's impact on procedural effectiveness.
So while younger CAs might focus on those financial aspects, those with more years under their belt see the value in the streamlined procedures that GST has introduced.
Exactly. They've likely had to navigate all those complexities of that pre-GST era and can really appreciate the improvements that the new system has brought about. It's fascinating to see how those different perspectives can contribute to a more, holistic understanding of a complex issue like GST.
One thing that really stands out to me from this deep dive is that recurring theme of sustainability. It's no longer just a niche topic. It's woven into every aspect of business and finance. I'm particularly interested in the growing importance of sustainability reporting, auditing, and assurance.
It's an area that's gaining momentum so rapidly. As stakeholders, investors, consumers, regulators, they're demanding greater transparency and accountability from businesses. They want to know how companies are managing their environmental and social impacts, not just their financial performance. So it's not just about doing good, it's about proving that you're doing good. Exactly. And that's where sustainability reporting, auditing, and assurance, that's where they come in. They provide a framework for businesses to measure, disclose, and verify their sustainability performance. And it builds that trust and credibility with stakeholders.
Okay, so let's break it down. What exactly is sustainability reporting?
It's the process of disclosing a company's economic, environmental, and social performance, going beyond those traditional financial statements to provide that holistic view of their impact on the world. There are established frameworks and standards out there, like the Global Reporting Initiative, GRI standards. They guide companies in preparing these reports.
So it's about telling the full story, warts and all.
Precisely. It's about being transparent. And in India, there's a growing push to make sustainability reporting mandatory for certain companies. This is part of a global trend, really, that's being driven by investors, consumers, and regulators. They're all demanding more information about how companies are managing those sustainability risks and opportunities.
So it's no longer just a nice to have. It's becoming a must do for businesses that want to stay ahead of the curve. But how do we know that companies are being truthful, accurate in these reports? Is there a way to verify their claims?
That's where sustainability auditing comes in. It's a crucial step in making sure those sustainability reports are credible. Sustainability auditors are kind of like financial auditors, but they focus on verifying the accuracy and reliability of that sustainability data. They scrutinize the information, the methodologies, the processes behind the company's sustainability disclosures. They give that independent assessment of the reported information.
Okay, so it's like having an expert come in and make sure that companies aren't just, greenwashing. Yeah. Or making claims that they can't back up.
Exactly. Sustainability auditing helps to build that trust and confidence among stakeholders, making sure those sustainability reports are more than just, marketing fluff. Now, there are different types of sustainability audits out there, ranging from compliance audits, which focus on adherence to specific regulations, to performance audits, which assess how effective a company's sustainability management systems are.
Okay, so some audits are about checking the boxes, and others are about evaluating the actual impact.
That's a great way to put it. And the scope of an audit can really vary. It depends on, the company's industry, its size, and the specific sustainability issues that are most material to its operations.
Now, along with auditing, the article also highlights the importance of sustainability assurance. What's the difference between auditing and assurance?
While auditing focuses on evaluating the evidence supporting those sustainability claims, assurance goes a step further. It provides an independent opinion on the overall quality and reliability of the reported information.
So it's like getting a seal of approval from a trusted expert.
Precisely. Sustainability assurance enhances that credibility of the company's sustainability disclosures. It gives stakeholders greater confidence in the information that's being presented. There are internationally recognized standards out there, like the AA1000 assurance standard, that guide assurance providers in evaluating the quality and completeness of that sustainability information.
Okay, so there's a whole framework and methodology for making sure that the assurance process is rigorous and trustworthy. But what about the people who actually conduct these audits and provide assurance? assurance? What qualifications do they need?
Well, first and foremost, they need to have the professional credentials and ethical grounding of a recognized accounting body, like ICAI. They also need, in-depth knowledge of those sustainability reporting frameworks and standards, as well as a solid understanding of the environmental and social issues that are relevant to the company's operations.
So it's a specialized area of practice that requires a unique combination of accounting expertise, sustainability knowledge, and ethical awareness.
Exactly. It's a challenging field, but it's incredibly rewarding for CAs who are passionate about sustainability. ICI is actively developing training programs and resources to equip its members with the skills and knowledge they need to really excel in this emerging field.
It's exciting to see how the role of CAs is evolving to meet those demands of a more sustainable future. It's a clear signal that sustainability is no longer just a side project. It's becoming integral to the core of the accounting profession.
You're absolutely right. CAs can play such a vital role in helping companies develop and implement, those robust sustainability strategies. They can assist with data collection and analysis, preparing those sustainability reports, conducting internal audits, and providing assurance on the reported information.
So CAs can really become those trusted advisors to companies on their sustainability journey.
Precisely. They can help companies navigate all the complexities of sustainability reporting, identify areas for improvement, and ultimately demonstrate that commitment to a more sustainable future.
Well, it sounds like there's a whole new world of opportunity opening up for CAs who are passionate about sustainability. Okay, we've covered a lot of ground in this deep dive, from economic engines to sustainability. It's clear that the accounting profession is facing a wave of change and opportunity. Now let's shift gears a little bit and explore a topic that's both fascinating and a little bit intimidating: cybersecurity.
Ah, yes, the digital frontier where risks and rewards they collide. Cybersecurity is a topic that's becoming increasingly important for businesses of all sizes. And CAs have a critical role to play in helping organizations navigate this complex landscape.
The journal includes an article that really dives into the current cybersecurity landscape. It explores both the defensive and offensive sides of this digital battleground. It's a must read for anyone who uses technology, which is pretty much everyone these days. But what exactly are the key components of this landscape? What are the major trends and challenges that businesses are facing in this realm of cybersecurity?
Well, one of the biggest challenges is that constantly evolving threat landscape. It seems like every day there's a new type of malware, ransomware, or phishing attack emerging. It's like a never-ending arms race between the good guys and the bad guys.
It can be really overwhelming,
Yeah.
especially for smaller businesses who might not have dedicated cybersecurity teams. It's like trying to defend a castle with a toothpick.
It's definitely a challenge, but there are, strategies and tools out there that can help businesses of all sizes improve their cybersecurity posture. And CAs can play a valuable role in advising their clients on these matters.
Okay, so let's dive into some specifics. The article talks about both defensive and offensive cybersecurity measures.
Yeah.
Let's start with that defensive side. What are the essential tools and techniques that businesses need to have in place to protect themselves from cyber attacks?
One of the most fundamental tools is the firewall. It acts like a barrier between your computer and network and the outside world. It inspects incoming and outgoing network traffic, and it blocks any activity that doesn't meet predefined rules.
So it's like a digital bouncer, only letting in the good traffic and keeping the bad guys out.
That's a great analogy. Now, firewalls come in different forms, from hardware devices that protect entire networks to software programs that run on individual computers. It's essential for businesses of all sizes to have firewalls in place as a basic security measure.
Makes sense. It's like, locking your doors and windows, a basic but essential step in protecting your home. Now, the article also mentions intrusion detection and prevention systems, or IDPS. What role do those play in cybersecurity?
IDPS are designed to monitor network traffic for any suspicious activity that might indicate an attack is underway or has already happened. They're kind of like security cameras that watch for unusual behavior. They can alert security personnel or automatically take action to block or mitigate threats.
So they're constantly on the lookout for anything fishy.
Exactly. They're looking for patterns and anomalies that might suggest malicious activity.
And what about SAME systems? The article mentions those as well.
Right. So SIEM stands for Security Information and Event Management. These systems are like central hubs for security information. They collect and analyze data from various sources within an organization's, IT infrastructure.
So they're like the brains of the operation,
Yeah,
piecing together all the information to get that comprehensive view of what's going on.
exactly. They help organizations identify patterns, detect anomalies, and respond to threats more effectively.
Okay, so we've got firewalls, intrusion detection systems, and SIEM systems all working together to protect the network. But what about individual devices? The article highlights the importance of endpoint security. Why is that so crucial?
Endpoint security focuses on protecting individual devices, laptops, desktops, mobile phones from threats. Think of it as securing all those points where users are accessing the network.
So it's like having multiple layers of security,
Well,
ensuring that even if one layer is breached, the others can still hold the fort.
precisely. Endpoint security usually involves using tools like, antivirus software, anti-malware programs, and data encryption to protect sensitive information. It's about securing the weakest link in the chain, which is often the individual user.
So strong passwords, being cautious about suspicious emails, keeping software up to date, all of that is part of endpoint security.
Absolutely. User awareness and education are crucial components of any cybersecurity strategy. Now, along with endpoint security, the article also highlights the importance of secure web gateways, or SWGs.
Secure web gateways, they sound like something out of a spy movie. What exactly do they do?
Think of them as digital bodyguards for your web browsing habits. SWGs act as intermediaries between users and the internet, blocking access to malicious sites, filtering out harmful content, and preventing malware downloads.
So they're like a safety net preventing you from accidentally, stumbling into dangerous territory online.
Exactly. They provide that extra layer of protection, especially for businesses that might have employees, accessing the internet for work.
Makes sense,
So,
especially these days where those cyber threats are kind of lurking around every corner. Now, the article also mentions email security solutions.
yeah.
Why? Why is email such a prime target for cyber attacks?
Email is still one of the most common ways we communicate, right?
Yeah.
Both personally and professionally. And that makes it a very attractive target for cyber criminals. They can use email to spread malware, to steal credentials, and to launch those phishing attacks, the ones that try to trick users into revealing sensitive information.
So it's not just annoying spam anymore. Email can be a gateway for some pretty serious cyber threats.
Exactly. And that's why email security solutions are so important. Those solutions usually include things like spam filters, antivirus protection, and phishing detection to protect users from those malicious emails. They're kind of like those digital mail rooms, that screen out the dangerous packages before they can even reach your inbox.
Sounds like a must-have for any business or individual who relies on email for communication.
Okay.
So you get firewalls, intrusion detection systems, SIEM systems, endpoint security, secure web gateways, and email security solutions. That's a lot of layers of defense. But is it ever enough?
Cybersecurity is an ongoing process. It's not a one-time fix. It's about constantly adapting and evolving to stay ahead of those threats out there. And along with those preventative measures, there are also those proactive steps that businesses can take to identify and mitigate vulnerabilities
Yeah.
before cyber criminals can, exploit them.
Okay, I'm intrigued. What does this proactive approach look like? Are we talking about like hacking back at the bad guys or something?
Not exactly. It's more about thinking like the bad guys, to identify those weaknesses in your own defenses. One of the key techniques used in this proactive approach is something called penetration testing.
Penetration testing. I've heard that term before, but can you explain what it actually involves?
Yeah, it's basically a simulated cyber attack that's conducted, with the permission of the target organization. Ethical hackers, they're also sometimes called white hat hackers. They use the same tools and techniques as cyber criminals to try to penetrate the organization's systems, networks, and applications.
So it's like a controlled experiment to see how strong their defenses really are and where those vulnerabilities lie.
Exactly. The goal is to identify and fix those weaknesses before malicious actors can exploit them, allowing the organization to really improve its overall security posture.
It sounds like an essential exercise for any organization that really wants to take cybersecurity seriously. Like having a security consultant come in and test your alarm system to make sure it's working properly.
That's a great analogy. Now, there's another technique called red teaming. It takes penetration testing to the next level.
Red teaming, that sounds intense.
It is. Red teaming involves simulating a more realistic and comprehensive cyber attack, often involving multiple attackers using a variety of techniques. Things like social engineering, phishing, malware.
So it's like a full-blown war game,
Yeah.
but in the digital realm.
Exactly. Red teams are designed to test not only the organization's, technical defenses, but also their incident response capabilities, their communication protocols, their overall resilience. It's about preparing for that worst case scenario and making sure that they can respond effectively if a real attack happens.
Sounds like an incredibly valuable exercise.
Yeah.
Albeit a bit stressful for the organization being tested.
It can be, but the insights gained from a well-executed red team exercise can be invaluable in improving an organization's cybersecurity posture. Now, while technology plays a crucial role in cybersecurity, we can't forget about that human element. Social engineering is a technique used by both attackers and defenders in the cybersecurity landscape.
Okay, but we were talking about social engineering earlier, and it sounded like a negative thing. How can it be used for defense?
You're right. Social engineering is often used by attackers, to manipulate people, to get them to divulge confidential information or grant access to systems. But defenders can also use those social engineering techniques to test an organization's, vulnerability to these types of attacks. For example, they might send out those simulated phishing emails to employees to see how many people fall for the bait and click on malicious links.
So it's about raising awareness and educating employees about those risks of social engineering.
Exactly. It's about making employees more cautious, more vigilant, helping them to recognize and avoid those types of attacks.
It's a reminder that cybersecurity is not just about technology, it's about people too. Now, the article mentions a few other offensive cybersecurity techniques, things like vulnerability scanning, malware analysis, and reverse engineering. Can you give us a brief overview of what those involve?
Sure. So vulnerability scanning, it involves using those automated tools to scan systems and applications for known vulnerabilities, kind of like running a security checkup to identify those potential weak spots. Malware analysis involves examining, malicious software to understand how it behaves, to identify its origins, and to develop those countermeasures. It's kind of like dissecting a virus to see how it works and how to neutralize it. And reverse engineering involves analyzing software or hardware to understand how it works, often with the goal of replicating or modifying its functionality.
So it's about understanding how the bad guys operate and using that knowledge to develop those better defenses.
Precisely. It's about being proactive, staying ahead of those threats, and constantly evolving your cybersecurity strategy.
Now, speaking of evolving strategies, this journal highlights a particular area of opportunity for chartered accountants that often gets overlooked.
You mean forensic accounting?
You got it. The journal has this article that delves into the role of CAs in uncovering financial fraud and white-collar crime. It's a side of accounting that we don't always see in the headlines, but it's absolutely crucial for maintaining that trust and integrity in the financial world.
Absolutely. Forensic accounting is all about using those accounting skills and those investigative techniques to uncover those financial wrongdoings. It's like being a financial detective, piecing together evidence to solve those complex financial puzzles.
So we're talking about things like fraud, embezzlement, money laundering, the kind of stuff that makes headlines when it's on a large scale.
Exactly. Forensic accountants are often called upon to investigate those allegations of financial misconduct, to analyze that complex financial data, and to provide that expert testimony in court cases. Their work can be instrumental in bringing those responsible for financial crimes to justice.
It sounds like a challenging but incredibly important field. What are some of the key skills that CAs bring to the table in forensic accounting?
Well, CAs have a deep understanding of accounting principles, financial reporting, and auditing procedures. I mean, that's their bread and butter. This expertise is essential for spotting those red flags, tracing those fraudulent transactions, and understanding the intricacies of those financial systems that might be used to conceal illegal activities.
So they know what to look for and where to find it.
Precisely. They're also skilled in analyzing and interpreting data, thinking critically, and solving problems. All those essential traits for a good detective, whether they're dealing with, financial crimes or traditional criminal investigations.
That makes sense. Now, the article mentions that technology is playing an increasingly important role in forensic accounting.
Yeah.
I imagine that's both a blessing and a curse.
It's definitely a double-edged sword. On the one hand, technology has made it easier for criminals to commit financial fraud and cover their tracks. But on the other hand, it's also given forensic accountants those powerful new tools to uncover these
So
crimes.
they're using technology to fight technology.
Exactly. Forensic accountants are now using data analytics, artificial intelligence, even blockchain technology to enhance their investigative capabilities. They can analyze these massive data sets, identify patterns and anomalies, and trace transactions across those complex networks. Things that would have been incredibly difficult, if not impossible, to do manually.
It sounds like a field that's constantly evolving as technology advances.
It certainly is. And as financial crimes become more sophisticated, forensic accountants need to stay ahead of the curve, constantly learning those new techniques and embracing those new technologies.
It's a reminder that in the digital age, that cat and mouse game between criminals and investigators is constantly escalating.
You're absolutely right. Now, shifting gears a bit, the journal also includes this really helpful section that addresses those common ethical dilemmas that CAs face. It's called Know Your Ethics.
I love that they have a dedicated section for this. Ethics are so important in any profession, but especially in accounting, where that trust and integrity are paramount.
It's like an ethical compass. It guides CAs towards making the right decisions, even in those challenging situations. The journal presents these various scenarios and provides guidance on how to navigate those ethical gray areas.
Okay, so let's dive into one of the dilemmas that they present. The journal asks, can a practicing CA agree to select and recruit personnel, conduct training programs, and work studies for and on behalf of a client?
That's a great question, and one that many CAs might grapple with. The good news is that the answer is yes.
So CAs can wear multiple hats. They can be both financial advisors and HR consultants.
Absolutely. The Council of the Institute of Chartered Accountants of India has clarified that these activities fall under the definition of management consultancy and other services which CAs are permitted to provide.
It makes sense. CAs often have a really deep understanding of a client's business. So they're well positioned to assist with those HR and training needs as well. But what about promoting these services? Can a management consultancy company advertise its services?
That's where things get a little tricky. The guidelines for corporate form of practice actually restrict management consultancy companies from advertising or using a logo.
That's interesting. So they can provide these services, but they can't really promote them.
That's right. The rationale behind this restriction is to maintain the professionalism and the integrity of the CA designation. They want to avoid any perception that CAs are engaging in aggressive marketing or commercializing their services.
So it's about striking that balance between serving those clients' needs and upholding the ethical standards of the profession.
Exactly. Now, moving on to a question that's relevant to that evolving business landscape. Can a CA firm be registered with the Institute as a limited liability partnership or an LLP?
LLPs have become such a popular structure for businesses. They offer that limited liability protection and a more flexible management structure.
You're absolutely right. And the good news for CAs is that they can take advantage of this structure as well. The Chartered Accountants Amendment Act of 2011 explicitly allows CA firms to be structured as LLPs.
So CAs have more options, more flexibility in how they organize their practices.
Exactly. Now, the journal also addresses a question that might seem a bit surprising. Can a member in practice be part of an association of persons, an AOP, with other members or other professionals?
That's an interesting question. AOPs are a common structure for collaborations and joint ventures. So I can see why a CA might want to be a part of one.
However, in this case, the answer is no. The Chartered Accountants Act of 1949 only recognizes firms and LLPs as permissible modes of practice, aside from practicing individually.
So AOPs are off the table for practicing CAs.
That's right. It's about maintaining that clarity and accountability within the profession.
Okay, that makes sense. Now let's move on to a question that's relevant to many businesses. Can a member in practice provide payroll services?
Yes, they can. Payroll services fall under the activities permitted under the Chartered Accountants Act. However, there's an important caveat.
Okay, I'm sensing a but coming.
You got it. A CA cannot provide payroll services to an entity for which they are also the statutory auditor.
So no double dipping.
Exactly. It's about avoiding those conflicts of interest and maintaining that independence in the audit function. Now let's fast forward to the digital age. Can a member in practice use a messaging app to send messages to make people aware of their practice and the services they provide?
That's a question that a lot of professionals are grappling with these days. How to leverage these new communication channels without crossing any ethical boundaries.
Right, and the council has provided some guidance on this. While messaging apps can be used for, for general communication, they cannot be used for those unsolicited promotional messages or advertisements.
So no spamming potential clients with WhatsApp messages about your amazing CA services.
Exactly. It's about respecting those professional boundaries and maintaining a sense of decorum.
Makes sense. Okay, so targeted communication is fine, but mass advertising through messaging apps is a no-go. What about responding to tenders, advertisements, and circulars? Can CAs actively participate in those to seek out new clients and projects?
Absolutely. The Chartered Accountants Act specifically permits CAs to respond to those opportunities.
So it's a level playing field when it comes to competing for business.
That's right. CAs are encouraged to be proactive and engage in a healthy competition. Now for our final ethical dilemma, let's talk about something a little more personal. Greeting cards and invitations. Can CAs use their professional designation on these items?
I can see how that could be a tricky situation. It's about finding that right balance between personal and professional identities.
Exactly, and the council has provided some guidance on this, stating that using the chartered accountant designation as well as the firm's name, it's permissible on greeting cards, invitations for marriages and religious ceremonies, and invitations related to office openings or changes, but only if those are sent to clients, relatives, and friends.
Okay, so it's okay for personal use within a defined circle, but not for broadcasting your professional credentials to the world at large.
That's the gist of it. Yeah, it's about maintaining that dignity and professional image of the CA designation.
Well, I think that's a great note to wrap up on. We've covered so much ground in this deep dive. We explored the multifaceted world of accounting in 2025, from India's ambitious economic plans and the ever-evolving world of taxation to the rise of sustainability, the complexities of cybersecurity, and the importance of ethical conduct.
It's an exciting time to be a CA. The profession is evolving so rapidly, embracing new technologies, expanding into new areas of expertise. Those who are willing to adapt, to learn, and to embrace those changes, they'll undoubtedly thrive in this dynamic environment.
And for those who are eager to learn more, I highly recommend checking out the Chartered Accountant Journal. It's a treasure trove of insights and information, keeping CAs up to date on all the latest trends, challenges, and opportunities shaping the profession.
Until next time, keep learning, keep growing, and keep pushing those boundaries of what it means to be a chartered accountant.
And remember, dear listeners, the world of accounting is far more dynamic and fascinating than you might think.